Hi, everyone. We are going to start the webinar now. And again, this is Sharon Barker, and I'm the Vice President and Chief Operating Officer here at the Housing and Community Development Network of New Jersey. And what we're going to do is have a little brief intro. I want to let you know a few things. We're recording this webinar, so it will be available on our website for you to review again at a later date. We are going to be taking questions, but please type them in, and I will stop our presenter at different points if there's questions pending. Otherwise, we'll hold all questions to the end. So with that, we will start you and Freddie Mac, Better Business Together, and we're excited to present on making home possible for first-time home buyers, talking about who qualifies, mortgage products, and the process, and connecting realtors and housing counselors in this business. So our presenter today is Jason Jeffries, and he's a lending manager in the Division of Affordable Lending and Access to Credit at Freddie Mac. He's also responsible for creating, implementing, and executing affordable lending strategies for financial institutions nationwide. And these strategies foster economic empowerment, increase loan production, and embrace CRA lending requirements. Prior to his current position, he was with a national multi-billion-dollar bank as the Senior Community Development Officer. So I know that Jason is bringing quite a bit of knowledge and information to this call, and I look forward to seeing your questions because they are always wonderful questions that we get throughout these webinars, and I'll turn it over to Jason.
Good afternoon, everyone. Thank you so much for that wonderful introduction. Just want to thank and acknowledge Stacy Berger. Sharon, thank you so much for this time, and your wonderful staff over at HCDNNJ. And just thank them so much for this opportunity and your partnership. Freddie Mac really values the partnerships of organizations like yours all throughout the country. And I'll even give a little bit of more time to talk about how we work along with organizations or just other industry partners. So without further ado, let's begin into the presentation. As mentioned, it's called You and Freddie Mac, Better Business Together. My name is Jason Jeffries, and I'm the Affordable Lending Manager for the Northeast. Next slide.
Jason, I'm on somebody else's computer, and I'm trying to get the next slide for you. Give me 1 second.
No worries, no worries. So just so while we're going through this, getting to the next slide, this opportunity, as I mentioned, is a great opportunity for us to continue and to foster relationships with housing organizations all across the country. As mentioned, I work with several different lenders. I'll also give an opportunity to identify some of those lenders that might be part of your current network. And we're looking to expose that information to you so that we can deepen our relationship. So just to go a little bit into the background about Freddie Mac, because I oftentimes get questions about, Jason, can you do my loan? And the question is no. The reason why, because Freddie Mac is not a lender, but we provide liquidity to the industry. We were chartered by Congress in 1970. We operate in 3 main lines of business, which are single family, multifamily, and investments. We participate in the secondary mortgage market. We buy mortgages and related securities. We issue guaranteed mortgage related securities. We also offer an array of products to fit market needs. Finally, we provide resources and tools to support customers and educate the public. Once again, educate the public. Next slide. So the process, just for those who are more visual, which I really love, is how it goes here. So what happens is individuals are looking to buy a home. So you see the home icon right there. And the bank actually issues a note. That note is actually taken in by the bank and sold to Freddie Mac. That note then goes to the market. And the market provides us with funds. We transfer the funds from the industry or from the market back into the entire process of the mortgage. So as you look at the 2 little boxes there at the bottom of the slide, We see lenders or sellers originate loans with borrowers in exchange for mortgages for participation certificates or sell for cash. Freddie Mac then entails buy the mortgages, guarantees, and also sells to investors, and we retain investments in the mortgages. I can give more clarity upon that based upon some of the questions, because I do get some questions from time to time about how that works. And as Sharon had mentioned, as questions roll in, we'll try to field them as much as we possibly can and as frequently as we can. Please, next slide. So who we are. Our initiative for this year is we're trying to move housing forward. And not only just moving housing forward, but we're trying to create responsible, sustainable, affordable lending products. Keyword, responsible and affordable and sustainable. We don't just want to put people in homes, but we want them to keep their homes for an inheritance, and they can be part of their legacy. And we also want to hold our lenders and all industry partners accountable and responsible for the products of which they actually they provide to the community. So we're building a better housing finance system for home buyers, homeowners, renters, lenders, taxpayers, and our progress is continuously moving forward. We created a product that can allow you to put down as little as 3%, which is our Home Possible Advantage product, and I'll explain a little bit more about that. Last year, we did $456 billion in funding. And not only that, but also we helped close to 270,000 first-time home buyers get the opportunity to own a piece of the rock. So we're pretty excited about that, and we're going to continue those efforts moving forward with the help and partnership such as what we have right here with HCDNNJ. Continue. Moving affordable lending forward. So I'm going to read this a little bit verbatim because I think it's very important information. So we offer financing solutions to help credit-worthy, low to moderate income borrowers become homeowners. Critical, especially in this environment where a lot of people still believe that their life is going to be just solely based upon being a renter. We dispel a lot of myths all across the country about what can qualify you as a credit-worthy borrower. We promote innovation to address changing needs and demographics, working with housing finance agencies or HFAs all across the country, and there are several, forming alliances across the industry to create home ownership and opportunities. Some of the larger institutions that you might have heard of, some of the partnerships, Quicken, Bank of America, and even Easter Seals, which is a pretty interesting affiliate. But those alliances are very valuable to pushing the housing or the needs of the community forward. We support borrowers through Freddie Mac's borrower help centers and networks. We actually have borrower help centers, roughly about 16 right now, everything from the East Coast to the Mississippi Delta and also to the West Coast. Those borrower help centers were created for the sole purpose of helping distressed borrowers during the height of the economic crisis. So we set up these satellite offices so that individuals can go in, speak with a person, and get the assistance that they needed in order to stay in their home. Now that a lot of the foreclosures have actually subsided, we're actually repurposed a lot of those borrower help centers now to focus on home ownership. And we will continue to keep those organizations in operation through sponsorship for the sole purpose of just pushing our mission forward to help well-deserving families become homeowners. We provide resources, training, and tools. These resources are very valuable. The training is priceless, and the tools are ever evolving. And we could talk a little bit about that based upon questions. Next slide. Who do we target? We target the families or first-time homebuyers. We target millennials because there's a lot of young kids that are sleeping on their parents' couch, and the parents are knocking on our doors and saying, we got to figure out a way to get my son or my daughter out of my basement. So we are doing our best to come up with innovative products to meet the needs of not only just the first-time home buyers and millennials, but also multicultural buyers. So we're monitoring and we're collecting data on spending or buying habits in the multicultural communities. We're also focusing a lot on disaster areas. Disaster areas are also opportunities to become homeowners, or for well-deserving families to become homeowners through ways of changing, working with municipalities, working with different organizations who are serving areas that have been identified as natural disaster areas or disaster areas. We also work with underserved communities. And as I mentioned before, I use the term low to moderate income buyers. And in that definition, we identify it as incomes that are less than 80% of the area median income or low income purchases. And then there are some very low income purchases where the area median income is at 50%. And I just want to kind of clarify, because it doesn't say this here, that although we focus on first-time home buyers, typically our products are not limited to just first-time home buyers also. We can actually serve the needs of all home buyers. And I'll explain how our products can actually benefit individuals in that way. Please, next slide. So we're watching, as I mentioned, I said we're collecting data, we're collecting trends, and we're kind of putting together all of that information to determine what is the next wave of borrowers or either borrower habits. And in this slide, we identify that in the next about 10 years, a little bit more, a little less, we identify that the two largest growing segments are the Asian and Hispanic populations. Those two ethnic backgrounds are continuously growing at a very rapid pace. And we note that there'll roughly be about 12 million home buyers entering the market that'll be predominantly either Asian or either Hispanic. Interesting statistic. But here's another thing also, and I'm glad that this next slide came up, which is an FHA loan comparison chart and table by the minority segment. And we broke this out specifically for the state of New Jersey. One of the things that we're noticing in the affordable business is that we're starting to notice that there are one or two products that are most heavily used amongst certain segments, which tend to be the low to moderate income areas, where either the borrowers are either African American or either Hispanic. And in those areas that are identified as low to moderate income, in specific areas we identified in Essex and Hunterdon and Morris and Somerset and Sussex, and also in Union, we identified that a large portion of either Black or either Hispanic borrowers are utilizing the FHA loan product. And if you notice, there's a big difference between those two ethnic backgrounds and their counterparts, either non-minority overall or either other. And what we're noticing is that the high utilization of FHA products, although one or two things are actually happening, and that is it that the industry is not educated or not aware of alternative products, or is this the path of least resistance? And that's something that we are always asking that question, and we're trying to help identify and educate the market on the different products and opportunities that are out there when it comes to buying a home affordably, responsibly, and sustainably. Next slide.
Actually, Jason, before you do that, there is a question. Actually, there's two questions. So, are your products offered throughout the entire state of New Jersey or just in targeted areas?
Okay, to answer that question, those areas, as long as the area, and that's a very great question. So as long as the area actually, and we have what's called an income eligibility tool, as long as a borrower meets the income eligibility, they can actually buy in any area, not only just in New Jersey, but also across the country. Now, here's another thing also, Sharon, it's a great thing, that if there are areas that were either identified as being impacted by disasters or considered underserved, there are no income restrictions when it comes to the utilization of our product. So if an area that is, I'll give you an example, like a Staten Island. There are certain areas in Staten Island that are more prone to flooding. So in that area, it might be identified as either underserved or disaster area or potential disaster area. We would take off the income eligibility restrictions. And so that person, whether they make $1 or more, they can still buy the home because of the status of that particular area. I hope that answers the question.
Yes, and leads to a follow-up there. So does that stay? So we had Superstorm Sandy hit almost 5 years ago this October.
Yes.
So if someone was hit an area was hit 5 years ago, how long does that stay in place that they were a disaster area?
That is a very good question. I do not know how long, and I'm not afraid to say that, how long an area is considered a disaster area, because that's not a determination that we make it upon. I mean, basically, there's a lot of factors that determine whether or not how long an area is considered a disaster area, or in some cases, how long an area is considered underserved. Another great example of that is certain areas in New York. I'll give you places like Brooklyn, where nothing is affordable any longer. But there are incomes that are starting to that are still recorded from the previous years based upon census. So they're still considered underserved despite the huge gentrifications that are happening in that area. So if you look it up using either the income eligibility tool or a great resource, which is the FFEIC website, you would still see it as underserved or either at 80% area median income, when in fact there are multi-million-dollar homes. So it's kind of a long answer to say I don't know, because there's a lot of factors that go into how long an area will be considered either disaster or either underserved. But there's a lot of research, a lot of tools that are out there that can assist you. And as I mentioned, we have on our website the income eligibility tool. And if you want to Google that, income eligibility tool, Freddie Mac, it's a free web page or free web tool that you can use, or you can either use the trusty FFEIC website as well.
So you had a little ESP there because that was the follow-up question. Where could you find it? And you answered it before it was asked, so that was terrific. You want me to go on to the next slide?
Please do.
Okay.
And also keep me honest with time. So, if I'm going over, please keep me honest.
We're doing just fine.
Perfect. So going into the conventional loan shares, I love the comparison between the two products, because the one that we mentioned before with the FHA utilization being so high, and specifically the African American or either Hispanic background in low to moderate income areas, we see quite the opposite when it comes to the conventional products. So if you look there at the little legend, you'll see that had a little tongue twister there. Non-minority and Asian borrowers are highly utilizing conventional products. Now, interesting, because it seems as if, and if we go to another slide, moving forward, I guess that's okay. We could go back.
Maybe we can go back. I'm not sure if I can go back.
It's okay. I'll talk through it. So
okay.
In comparison to the two slides, the FHA comparison and the conventional comparison, the two slides show a difference in who's using what product. Now, there was another slide that that was actually created, or we had collected some internal data, noting that both African Americans and also Hispanic borrowers, in contrast to their non-minority counterparts, actually had very similar credit profiles. That is income, that is credit, and also education and various other different similarities in their credit profile. But yet, the utilization of FHA was higher in the minority area than it was in the non-minority area. So what we're trying to do, because we're trying to determine what is that driving factor that allows the predominantly minority area to use FHA, which has a tendency to be the highest and most expensive mortgage product out in the market amongst one group of individuals, in contrast to their counterparts. So when we think about that, we're starting to say, well, either it's the path of least resistance, which I used that term a little bit earlier, or either it's lack of education. And so we're going to go down the road of the latter, and that's lack of education. So as I mentioned a little bit earlier in the presentation, and I'll backtrack on it, was tools and also education and resources. So individuals like myself, I have maybe about 5 of the counterparts who are regionally located all across the country. And we engage all industry partners. That includes realtors, that includes housing counselors, and also loan officers, processors, you name it. Everybody that makes up the entire housing industry, including even mortgage insurance companies, on the difference or the disparity that we're seeing in the market. So we're educating them on affordable product alternatives. So FHA is not the only affordable product opportunity that's out there, but there are also conventional products that can achieve the dream of home ownership. And that's a perfect segue into our mortgage right now. And that's the Freddie Mac Home Possible mortgage. So now we created this product because all of the data, the trends, and the information that we collected kind of left us in a brainstorming session about how we can actually encourage sustainable, responsible, and affordable home ownership in a way that can be utilized by pretty much anybody. So we came up with this Home Possible. It's a series of products, because we have more than just one. But here's the cool part about it. It actually allows LTVs for as little as 95%, and I'll explain what that is, and as much as 105 total loan to value. So the products are for first-time home buyers, but also, as I mentioned, it also can serve the needs of many families like baby boomers who are looking to downgrade, and also from that large empty nest down into condos, co-ops, or single families out or anywhere across the country, as long as they meet the necessary qualifications to obtain this product. We're also created this product to meet the needs of the condo market, rural and manufacturing housing needs as well. Now, I'm sure if those questions didn't start rolling in, Sharon, they sure will as we start going into the depth of this product. Please continue. So, excuse me, borrower profile: first-time home buyers, repeat home buyers, families in underserved areas, new immigrants, very low and low to moderate income borrowers. These are all of the borrower profiles. The key features of our product: with Home Possible Advantage, and that's key to identify the difference between the two products. Home Possible Advantage can only be used for a single family product. 97 loan to value, 105 total loan to value, single family only. However, Home Possible can be used 1 to 4 units. I'll let that sink in. Our income eligibility tool, and with this product, will actually show if, well, our income and eligibility tool will actually also identify if an area can actually take on or Home Possible can actually be utilized in certain areas. So if you notice, I kept on talking about 80% area median income, or either 50%. We took a little bit more of an aggressive approach because we realized that people make money, but that still doesn't mean that they can afford homes. So we increased the AMI up 20% more, and we allowed 100% of area median income in higher cost areas can even be significantly more. Not saying that anybody on the phone would actually be lending in California, but if you can, sometimes you can go up to 140% of AMI. There are no income limits in underserved areas. Temporary subsidies and buy downs are allowed. Homebuyer education only required for one borrower when a borrower is a first-time home buyer. So I just want to put emphasis on this. HUD certified approved counselors are required to participate in this activity. That means that housing counseling is a necessity. But you know what? I actually want to put a little bit of an asterisk next to that and put a little bit more emphasis on the importance of housing counselors in the housing industry anyway. We identified, and this is internal, but I can share it externally, that borrowers who are more likely to sit down and be educated by housing counselors have less likely of a default when it comes to buying a home, as opposed to their counterparts who decide to walk into a financial institution and go through the process without any form of education. So I would even say that having an education to buy a home is less of a risk for a lender and even more of a benefit for the borrower themselves. Borrower benefits, low down payments, no minimum borrower contribution from personal funds. That's a pretty cool feature. That means that uncle, aunt, grandmother can actually assist the buyer in borrowing or lending them funds. Everything has to be documented, of course, and all of the things that we mentioned here on this slide all will differ from lender to lender. So some lenders may put in overlays, but that's very important to notice. But at the same token, understand that each one of these borrower profiles or these key features or borrower benefits are available with our Home Possible and Home Possible Advantage mortgages. Please continue. So you heard me talk a little bit about the Home Possible over FHA product, and I'm going to kind of go a little bit into it. There's so much more that I could talk about, but I'm going to be sensitive to time. So Home Possible is a conventional mortgage insurance automatic, Home Possible with the product, the 80% with a conventional product, the mortgage insurance ends at the time that the LTV goes below 80%. Sorry for that tongue twister there. It also, conventional mortgage insurance is only a monthly or either single premium. Down payment funds are applied to the principal. So that's a great feature. Now let's look at its counterpart, FHA. FHA mortgage insurance stays for the life of the loan unless the borrower puts down 10%. This is new in the 30-year FHA mortgage, and it has a tendency to impact the borrower significantly when it comes to being eligible for buying a home. Because if you have to pay upfront mortgage insurance and a monthly insurance premium, that can significantly increase the debt to income ratio, not only to mention the out-of-pocket costs. So those two things are very significant when it comes to buying a home. So if we only allow our borrowers or our customers just one option on buying a home, are we really doing them justice? I would say no. We have to give them an option and propose to them, these are all of the products that are out in the market. Some might actually work for a few, but let's just give them an option and not just stick them into any kind of product or recommend any kind of product because it's the path of least resistance. It is our duty, and that's all of our responsibility as industry professionals, to offer sustainable, responsible, affordable mortgage products. Down payment funds applied to principal and upfront PMI is also part of that FHA feature. Please continue. So we can grow responsible, sustainable, and affordable home ownership together. This slide is a great visual because it shows how we are all part of this entire process of creating home ownership. Outreach, education, lenders, the products that we utilize, the realtors, and Freddie Mac providing liquidity to the industry. We're not an island. We need every single component that is mentioned here in order to make our mission successful. And without every single person who's either on this phone or who will listen at this webinar, it's very important for all of us to be mindful of the role that we play as professionals. So let's just do that all together and make everybody in this next generation very pleased at the decision that they made in order to become a homeowner. Next slide.
Actually, I'm going to ask you a question there. There's a question about the relationship with realtors. Could you talk a little bit about how you work with realtors?
Sure. So we've identified, and I wasn't able to add this slide in. I just wanted to speak to it. But one of our, actually our vice president, Danny Gardner, who's a very brilliant person. I'm not just saying that because he's my boss, but he really is a really good guy. He came up with a term called the linden ecosystem. Love the term. And the term basically just identifies the key players in the home buying process when it comes to to borrowers. So there's the lenders, there's the realtors, and then there's the part that we play as a government-sponsored enterprise. So the realtor role, because 9 times out of 10, home buyers will identify a home before they will identify a counselor, before they identify the financing. They first want to see what they want. It's almost like shoe shopping. So they'll see it first, see the price, and then go into the store, put the fit on. But the person who's actually bringing the shoes to the individual actually is the realtor. Now, he or she actually has to be more educated on the products that will allow the borrower to buy the home, more so than any of us, quite frankly, because it's their recommendation that will determine which way they actually go to buy a home. So what we did was we took a very proactive approach, and we started reaching out to the national organizations that are so well recognized. The National Association of Realtors, which you see very frequently on commercials. The National Association of Real Estate Brokers, which is the African American segment of real estate professionals. Then we also have the National Association of Hispanic Realtors, which is, or NAREB. Then we also have ARIA, the Asian Association of Real Estate Associates. These three or these 4 organizations that I just mentioned, we sponsor their national offices world or countrywide. Or I would even say worldwide. And the reason why we do it is because we're providing them the same education that we have here today, and even more so in depth and ongoing, because we realize the value that they bring to the entire transaction. If they're educated, then they'll be able to recommend opportunities and create educated home buyers. So this partnership that we have actually helps them do 2 things. One, identify our affiliates that are in the market, which will ultimately allow them to get more business by hosting several different events we call open door events, where individuals are able to come in, hear presentations, hear speakers, in partnership with these organizations that I just mentioned, and actually get cards and transfer information and build that lending ecosystem, as I so early mentioned about or spoke about. So those type of partnerships are just proactive approaches. And we also, and I also want to put a little note on that, Sharon, is because during my presentations with these realtor associations, I also put strong emphasis on the role of the other industry partners, one of which is the housing counselor. Very important, because I don't think that every single realtor, and I could be wrong, actually sees the value that an housing organization actually brings. They may or may not. But it's very important for me to explain the role that you play to what they do and how it could be a benefit. and vice versa. So as we continue to have these dialogues, we're tying in those partnerships, and so the industry can work a lot more fluidly if we all respect and understand our roles in the home buying process. I'm off the soapbox now.
You want the next slide?
I am ready for the next slide.
Okay. Maybe. There it goes. Oop.
That's okay. I can talk through it. It's fine.
Now we're going ahead too fast, so I'm
yeah, that's fine. That's fine. No worries. So if you now, will everybody have an opportunity to have access to this presentation?
Yes.
Okay, perfect. So 2 slides back, there was a screenshot of the income eligibility tool. So the income eligibility tool is a fantastic tool that I noted as a free resource and tool that's made available to anyone. You could just Google it and go to the Freddie Mac website. The income eligibility tool, once you type in an address, it's very simple. You type in that address and it will determine whether or not if that home or that area can what the AMI of that area, if it's 100%, if it's 80%, or if it's 50%. But even more importantly, it will identify whether or not a home possible can be used in that area if it's underserved or either a disaster area. So it's a great tool. The other thing that you actually notice after that slide, and then when you get a chance to, is you'll identify the mortgage market indicator, or MIMI. So that slide, if you go one ahead, Sharon, that'd be great. There you go. So the multi-indicator market index, or MIMI, is a great opportunity to, it's a great resource and great information as well. And this is all free information. I'm going to kind of just step out of the slide and just mention something, that we're all professionals. And the more information we know and that we share with our customers, the more we put emphasis on our professionalism and our understanding of the market and our expertise. So Freddie Mac has actually taken that approach to say, you know what, let's flood the industry with resources, and they can determine on which type of or what area they'd like to be an expert in. And we back that effort by education and also with tools. So this is just one of those web resources that'll be great for you. Continue. Great. So here is a great website where you can download different information about our product, get a greater understanding about our product, also resources and information. You would also be able to identify co-branded material for realtors that you might be able to, you might have in your current network. There's a lot of information that's available, and also there's updates. So if there's market news that is relevant, you can choose to subscribe to areas that are most interesting to you, and you can get current updates as frequent as you like. Please continue. And I spoke about the linden ecosystem. That's a great visual. So as you see in the linden ecosystem, there's a few others that I wanted that are being mentioned that I didn't mention. I did mention the real estate professionals. I mentioned the lenders. I mentioned our role, but also housing organizations as well, and municipalities, policymakers and regulators, servicers, and also housing finance agencies as well. So thinking and acting holistically, we actually see the value in every single role that everybody plays. And this is actually a great way to continue our support for home buyer success. Continue. And final slide, our partnership with housing counselors, real estate professionals, or just industry partners in a whole is very vital to the success of what we do. Yes, we provide liquidity to the market, and what we do is very important. But the interaction that we have with you is just as important. It's critical to the success of the government-sponsored enterprises that you have. but it's also critical to the success of home buyers. That well-deserving family who actually tried their best to scrap together every single penny, every single dollar, save the extra 100 to 300 on their check every single month or every single week, just so they can own a home. We provide the service, the support to you, to your industry partners, so that you can help these well-deserving families, one, dispel myths, two, get away from predatory practices, and three, be strong in a decision-making process when it comes to buying a home. So I just want to thank you all for your time and your listening. And I think the next slide just identifies, Sharon, I think we're at the Q&A. Oh, let me just mention, yes. So there are a few lenders who are in the area, and I mentioned that to everybody. There are a few lenders who are in your area, and specifically in New Jersey, who serve the areas. That's Weichert Financial Services. They are a full-service financial firm that is separate from the real estate company, even though they're owned by the same parent. Weichert Financial is a great company. American Neighborhood Mortgage Acceptance Company, which is actually all across the country, or they're called Annie Mac, is also located, I believe, in Mount Laurel, New Jersey. Then there's First Choice Loan Services. They are also located in New Jersey. I believe they are in Newark, and they are a very great organization. If you get a chance, you can look up any of these organizations, and if there's more information you'd like about those lenders and how you can work with them or partner with them, I'm sure that the decision makers who are in that organization would love to work with you and give you the utmost support. And then final, no need to introduce, but JP Morgan Chase, which is a phenomenal organization that actually has our product, and it's a co-branded product that they utilize, and that's called Dreammaker. So the other lenders identify our Home Possible product as Home Possible for a Freddie Mac product, and JP Morgan rebranded the product to meet some of their criteria with overlays called Dreammaker. Fantastic product, great community interaction, and just all in all, just great partners when it comes to lending. Okay, looks like that
was the end of the slideshow. So we have just a couple of quick questions. If anyone else has them, please type them in. We're going to ask the few that are pending here. So one of the first ones that came up is before on the slide about who was eligible. It said that it referred to new immigrants being eligible for the loan. Can you give a little more information on what documentation will be required or any requirements associated with that?
So I'm going to answer that from a very, political standpoint, and that is because of the lenders set certain criteria in regards to how they identify immigrants or work visas and how they view that. So every single lender does have different criteria when it comes to who is eligible to take on these products. So you would have to speak to either the lender or someone the like, but I've seen various different documentation that would determine somebody's eligibility to get a mortgage. Okay, sorry, I didn't have more of a direct response. Yeah.
That's quite all right. We have two other questions here so far. One is, can affordable housing developers participate in these mortgage programs?
I would strongly encourage it. As a matter of fact, Sharon, at the conclusion of this call, I would say that builders, you could reach out to me directly. I'm working on an initiative with builders right now to help them source or identify qualified buyers, but also working with lenders and also all industry partners. So any way that Freddie Mac to support that effort, we'd love to do so.
Terrific. And then in reference to the multifamily homes, must one unit be owner occupied?
That is a fantastic question. And I'm going to even say, even though it's very simple, it is a fantastic question. I'm going to tell you why. With Home Possible, all homes must be owner occupied. I'm going to put that out there again. This is not a product that can be used for second homes. It cannot be used for investment properties. It must be primary residence only. And not only to mention, I spoke a little bit about how, yes, it does serve the needs of first-time home buyers, but also empty nesters. Let me explain to you how that works really short. You can sell your property, and if you're downgrading to a smaller home, or if they're baby boomers that are doing so, or so forth and so on, as long as you show no interest in another property, meaning that your name is on the deed and title of another property at the time of closing, then you'll be eligible to utilize this product. But if you have vested interest in another product, you will not be eligible to use this product to buy your home. There are certain stipulations that may say otherwise, which runs the very big gauntlet, but nonetheless, face value, primary residence only.
Perfect. That's the end of our questions. That's the end of the questions that are on here. I want to thank you, Jason, so much for putting this on today for us, the webinar. Again, I will remind everyone that it will be on our website. If you have any questions, please contact us. We'd be happy to answer them or get in touch with Jason for you or get you in touch with him and move forward. So again, Jason, thank you very much. This was very informative. Thank you, everyone, for participating. Bye-bye.
Thank you.